How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at two more pairs for analysis. It's going to be the Australian dollar, USD dollar, and then the British pound and Australian dollar. We're going to be using the COT reports. For those of you that don't have the COT reports, just go visit my website. It's on the bottom left corner over here. You can go to your resource tab on the website where you can download a free version of the COT reports. I've also made a couple of videos of how to update your COT reports for when I don't get time to do that. Also, it's on the channel. Just go view that as well. And then also, preferred brokers tab. Just go visit that. Definitely a broker that is worth looking out for. There's also some video categories on the website. So for those of you that's starting out on trading, go visit them or go view those videos. It tells you everything about trading and how to get started, and then carrying on to the more interesting stuff on trading. Okay, so let us hit the charts. So what can we see on the Australian dollar, USD dollar? On a daily time frame, I'm just going to zoom out. We can see that right around here, I'm just going to get my bearing. There we go. It was a very key area in the market. Just going to do that and then just move it up slightly. Okay, so as you can see, that was a nice key area in the market. Let's move it up slightly. So you can see there was a support area. It acted as a support coming down, breaking that support, breaking back into it, and then supporting it every single time, going back, doing all these false breakouts. But key area for me in the market, as like I said, there's been multiple touches in that. Now we can see that market broke through it, came up, acted as a resistance a little bit, and now it's starting to move to the upside. It's breaking that, broke that resistance area, and you can see market moving up ever so slightly. So what is going to happen with this pair? We'll have to see. Like I said, there's a couple of days left in this month. So will this be the area that, or the time that, the Australian dollar starts pulling up, and making his move to the upside against the dollar? We will have to see. Going to your 4-hour time frame. Just zooming out a little bit again. Just want to draw in my areas so we can see that upwards movement in the market with this trend line that's going up. Okay, there's been multiple touches at the bottom, as you can see, and I'm just making a clone quickly of that, and so you can see that there is the zone that that the price has been moving up into, hitting the top, going to the bottom, hitting that top area again, going, respecting the bottom end of that trend line, and then moving to the upside. Okay, so you have got those key areas. For those of you, that caught this little move to the upside, you could see there was this break in structure right around there. Ooh, excuse me, that was my phone dropping. Moving to the upside, and then with that break in structure, again, creating a nice fair value gap. So, fair value gap works on any currency pair. So look at that, price breaking at, creating that fair value gap on the 4-hour, as you can see. Then price moving up, hitting that top area of that trend line, coming back, going into that fair value gap area, and from there on, it's just been moving to the upside. So don't disregard this fair value gap. For those of you that haven't seen this, or it's the first time that you're hearing about it, I've made a couple of videos regarding it in my website called Smart Money Concepts. Just go back. I'll put the link in the description as well, so you can go and view that video. On an hour time frame, so what can we see? We obviously know that price is now moving up. Okay, we know and we can see how these highs are starting to be taken out. Okay, liquidity being taken out in the market. Just zooming out so we can see it clearly. Okay, zooming out a little bit more. We could have seen it in the 4 hour, but it's nice to view it on this area. So with this downwards movement, you can see all these lows being taken out in the market. There was a high over there. Okay, and now we started seeing this return, or the turn in the market, forming a lower low, lower high, lower low, lower high, and so forth. And every single time it's been taking out these highs in the market. Okay, so how do you catch this? There's not always fair value gap that gets formed in the market, but do not disregard or throw away your Fibonacci, guys, from that low to that high. Okay, so you get that low area and you get that high, swing high, coming down into your 60 to 70 to 79% fair value Fibonacci retracement area. You place your buy, and as you can see, you know, this is now time to hold. So first target being reached over here, you hold for your second target that was reached over on this side. You get that big pullback in the market. So now you start holding. Do you hold for your third target? And as you can see, third target being hit over here. And if you don't, and once your third target is hit, okay, now you wait again for the next opportunity. So then you take your Fibonacci. Before we carry on, let me just pull that lines in for you, for those of you that don't see it. So your 100%, let's just draw it across. Okay, there we go. Right, so go watch my videos on Fibonacci's. You know, I've got a video, Fibonacci version 2, where I explain how I work my Fibonacci. So you take your low to the high, price retraces into your 62 to 79%, and then you hold it, you hit your first target. This is where price breaks that area. Second target, you can see price reaching that area, making a pullback, and now it's decision time. Do you hold or not? You know, if you've held, you can see price going up and down, hitting that last target. You climb out the market, and then you wait for another opportunity. And as you can see, price, this was your exit. Now you're waiting for another pullback. You take your Fibonacci from that low to that high. Okay, you move it across, and then you have patience, because then you draw in your area that you want price to move into. And as you can see, price going, you know, hovering over here, pulling back into that area of the 62 to 70% area. And then you can see price starting to move up. First, taking out the first target area. It is now hit that second target area, and now it's decision time. Do you hold or not? So if I zoom out a little bit more and I draw in these highs, because that is what liquidity is doing. Liquidity is hunting these areas just above the highs. So you can see price just tapped into or hunted that liquidity area. Where is your next area going to be? It's obviously going to be right there. Okay, so for those of you that's in your trade, it's decision time. Do you hold until it goes past your third area of third target, hitting that last area of liquidity? Okay, if I was you, I would have held. Just be risk free, basically. So every time it hits a target area, you know, take some partial profits. And this is another target area, profits. So by the time it hits your second target area, you know, the partial profits that you've taken is enough. You move your stop loss, and, you know, you're risk free. And this is where you let your trade just run to that area of, you know, third target. So currently we're waiting to see what price is going to be doing. Okay, will it be hitting? Like I said, is it going to start hunting this area at the top, or is it now going to start turning and making some retracement? Let's have a look at where price is going to retrace back to. Always look at your lower time frames. Don't disregard that. Don't throw it away. I mean, lower time frames is where you find your perfect entries. Okay, so let us move on to your next currency pair. It's going to be the British pound Australian dollar. Now on this pair, I mean, not a lot is happening, to be honest. We'll see it now, and for those of you that is trading this British pound Japanese, or the British pound Australian dollar, you'll see that, you know, for the last couple of days, it has just been collecting orders, basically consolidating in this area over here. Okay, there we go. Whoops, it's been running sideways. It's consolidating in that area, as you can see. So we're waiting to see what price is going to be doing. You know, is it going to break that area? Is it going to come down to that bottom? Okay, so what we're going to look at is your 4-hour time frame. And on the 4-hour time frame, what I just want to do is I'm going to zoom out a little bit, and I'm just going to show you the areas that I'm looking at where price needs to go past. So at the bottom, we have got this area over here of equal lows. So we're seeing that area of equal lows. So I need price to break below that, coming back and creating some sort of a fair value gap or entry. And I'll be looking at your fair value gap and also my Fibonacci. So using both tools, you know, not tools, but both means of entering. So those are the two that I'm using. And then this is going to be my previous high. Okay. The reason I'm not taking these high and this high or that high is this liquidity is still intact. So I'm taking my previous one, the closest one. So you can see that these ones are intact. Over on this one, we have equal lows. So yes, there is no, you know, if it breaks past it, there's some huge liquidity lying at the bottom here. And then there's liquidity lying at the top here. And at that top and that top. So if we see price breaking above that, you know that price is going to be start hunting that liquidity up to the top. And with this hunting of liquidity, because this is a 4-hour time frame, there is pips to be caught for hunting that. So definitely any break in structure of these two lines, I'll be, you know, sitting, going down to your lower time frames, your 15 minutes, 5 minutes, 1 minute time frame, to look at where any opportunity arises, so I can enter the market. And again, opportunities I'll be using, you know, the fair value gap to see where price is pushing through it, coming back, creating some sort of a gap, pulling back into that, and and I will be combining that with my Fibonacci tool. Let's look at our COT report. Excuse me. Didn't look at it on the Australian dollar, USD dollar, because you know, we're looking at Australian dollar on both sides. So basically what we can see is the British pound, and as we saw it on my previous analysis as well, British pound is getting a little bit weaker in net positions. So the net positions is growing into the negative, meaning there's longs being closed, shorts being opened. Marcus is pushing that down. Okay, so yes, we can see that in this price movement down to the bottom. But again, now you're looking at against the Australian dollar. So what is the Australian dollar doing? So on the Australian dollar side of things, also, you know, it's just getting a little bit weaker. It had a big push to the upside, and now it's getting a bit weaker. But it's going to be the toss, or the tussle between the Australian dollar and the British pound to see who is the weakest currency currently, to see where price is going. Okay, so guys, that's my analysis. Not a lot to be said on this British pound Australian dollar, but again, you know, something to look out for, just to keep your eyes on to see any break of that, because normally when there's some sort of a consolidation in the market, building up of orders, you know, some big moves will happen. So let's see, will it happen this week? Will it happen towards the beginning of the month with a push on that side? We'll have to look and see. So guys, that's all from my side. I hope you enjoyed this analysis. Don't forget to hit that like button, subscribe to my channel, hit that notification bell, and leave some comments in the comment section, and I will be seeing you on the next video. Stay safe and happy trading, guys.